Hello and welcome to US Stock Express. Let's dive into the market action for November 20th, 2025. So, what's driving the market today? We're asking three big questions. Is Nvidia's AI dominance starting to cause a wider market shakeout? Just how massive is the energy bill for this AI gold rush? And why are we seeing so many dramatic single stock plunges, even on seemingly good news? We have the answers, so let's get started. Wall Street definitely hit the brakes today. The S&P 500 led the major indexes lower with a 1.52% drop. The tech-heavy Nasdaq 100 took an even steeper tumble, falling 2.37%. The small-cap-focused Russell 2000 wasn't spared either, declining 1.85%. And in a rare bit of relativity, the Dow Jones was the so-called winner of the day, if you can call a 0.81% loss winning. The selling wave that started here rolled straight into Asian markets, crashing semiconductor stocks. They were dragged down by Nvidia's surprising post-earnings slump. This sell-off really highlights the sector's deep dependence on the AI chip giant, with key suppliers and partners from Japan to South Korea all seeing sharp declines. Now, here's the other side of the coin. While Asian chip stocks were getting hit, major US tech companies are actually doubling down. They're dramatically increasing their AI investments, signaling a massive long-term bet on the future of artificial intelligence. But all that computing power from the AI spending spree comes with a massive and often overlooked. The AI boom is creating an unprecedented demand for electricity, and it's starting to put a real strain on global energy grids. Shifting to individual stocks, AMD is making headlines for a less cheerful reason. Despite all the AI trade optimism fueled by Nvidia, AMD's stock is moving in the opposite direction, falling sharply as it fails to catch a ride on its competitors' success. This marks its sixth consecutive daily drop. But it wasn't all bad news. In a standout performance, Walmart is soaring after a stellar earnings report. The retail giant crushed profit estimates, boosted its full-year forecast, and even announced it's moving its stock listing to the tech-focused Nasdaq exchange. This is a clear signal of its evolution into a modern, tech-powered retailer. Meanwhile, chip equipment maker ASML saw its stock dip 5.6%. However, don't let a single day's performance fool you. The company behind the machines that make all advanced AI chips possible remains in an enviable, near-monopolistic position. Despite the pullback, analysts are still overwhelmingly bullish on its long-term prospects due to soaring earnings estimates. Next up, Jacobs Solutions delivered a real head-scratcher for investors. The company posted a robust fiscal Q4, beating earnings and revenue estimates with strong growth across its key sectors. Yet, despite the positive report, the stock took a significant hit, falling over 10%. That's a curious divergence between the company's solid performance and its stock price action. Over in the memory chip space, Micron took a sharp 10.9% drop. It seems investors were taking profits across the high-flying AI sector, giving the stock a bit of a reality check after it had nearly tripled this year. Despite the slide, the long-term story remains strong, driven by an ongoing memory chip shortage and skyrocketing demand for its high-bandwidth memory. Medical device company Insulet, or PODD, also had a rough day with a steep 9.7% drop. This decline came right after the company's highly anticipated 2025 Investor Day, where leadership laid out its long-term strategy. It seems the market's prescription for these ambitious plans was a bitter pill to swallow. Then we have Datadog, which fell 9.5% on the very same day it announced a strategic hire aimed at capturing more business from the lucrative financial services sector. The seemingly contradictory news definitely left investors scratching their heads. Even Western Digital, a top S&P 500 performer this year fueled by red-hot AI demand, wasn't immune. The stock fell 8.9%. It seems even the most high-flying stocks need to catch their breath sometimes. Chip equipment firm Tokyo Electron also felt the pressure with a sharp 8% drop. What's interesting here is the tug-of-war happening despite strong recent earnings and a flurry of institutional buying. The stock is facing headwinds from significant insider selling. Moderna took a sharp 7.5% tumble as well. The biotech stock is feeling the side effects of a market-wide sell-off, proving that even pandemic-era darlings aren't immune to a bad day. And finally, Coinbase took investors on a wild ride, falling 7.4% amid a broader crypto market slump that saw Bitcoin briefly dip below $90,000. This volatility hits Coinbase's core business directly, as lower crypto prices typically lead to reduced trading activity and fee revenue. That wraps up today's market update. Thank you for watching. Stay informed, and we'll see you next time.